There was a day when I first got divorced and I was taking care of my babies and I had $20 to go to the grocery store. $20, that was it. And I had to make that $20 last as long as I could. And I could feed my children on that. Today, if you have $20 to go to the grocery store, you're buying nothing. Absolutely nothing. This is a result of central bank managed inflation.
In a world where the value of money is constantly changing, managing your finances has never been more challenging. What if we told you that the rising costs and shrinking purchasing power you experience daily are not accidents, but the result of deliberate actions by central banks? Meet Lynette Zang, a seasoned financial expert with a clear message about the hidden dangers of inflation and the power you have to protect your wealth. Listen closely as Lynette explains how a simple yet profound shift can safeguard your savings and offer a path to financial freedom.
Now I want to start out, and you'll see on the left-hand side where in 1913, $1 bought $1.02 worth of goods. Of course, when they brought out and legalized the Federal Reserve, they were able to print 2.4 times the amount of new fiat money than they had prior to with the gold backing. Originally 1/20th of an ounce, so that one little gold coin, 1/20th of an ounce, backed a $1 bill, and they were equal. However, after the Federal Reserve was put in place, they could now print $2.4 for every 1/20th of an ounce of gold held in deep storage. And looking at the graph, you can see how it lost about 50% of its value, of its purchasing power value. Is this a surprise? Not really. And then after they did all of that confiscation, do you ever remember hearing anybody say how great the Depression was? How their purchasing power just exploded during that? We saw, I'm not going to talk about that today, but we saw very similar action to this in 2008 when prices were rising really rapidly. Because what they did is they gathered all the gold they could, and then they did a gold revaluation. By the way, every country has a gold revaluation account. So when the citizens lost that convertibility, bringing in their dollars, bringing this into the bank and walking out with this, okay? So in 33, citizens lost that convertibility. We were at 79 cents worth of purchasing power out of the original dollar. Now, 8171, okay? So that was just before Nixon took us off the gold standard. There was a run on the dollar in the 60s, which forced him to go ahead and close that gold window. What he really did was reneged and defaulted on the system that was set up in the 40s through Bretton Woods. But even at that point, we had almost 26 cents on the dollar, and countries lost that convertibility. Now we are completely in a debt-based system controlled by the central bank's ability to raise and lower rates to control the rate and speed of inflation. This was the first time that was actually tried historically. So you can see that we had a pretty rapid downward move in purchasing power, and then it sort of seemed to level off. So doesn't seem all that bad, but now officially, according to the Federal Reserve, out of the original $1.02 worth of purchasing power, we have 3 cents worth of purchasing power. And let's just go a little bit deeper to this because we can see this clearly on our march to zero. But from 1971, that's what I want to talk about, central banks have used that interest rate and globalization, right? Going to other countries where their labor is a lot cheaper to create deflation to control inflation. How nice. All right, here we are. I'm going to go through this pretty quickly because I think so much of it is self-explanatory, and you can see that we still have the lovely zero on the Federal Reserve chart because 100% of the time, government-backed debt-based currencies go to zero. 100% of the time. And you can see that we are pretty darn close. And the only thing that's really holding it is the confidence. But I want to point out to you that what inflation does is it creates nominal confusion, right? And this is a great example of that. 1971, from the BLS, Bureau of Labor Statistics, the average wage was $10,290, and spot gold was fixed at $35 an ounce. So if you had just been paid in ounces of gold, you would have ended up with 294 ounces of gold. And you can see that at $35 an ounce, that equates back to the average wage. Now we're off the gold standard. This I just pulled on the 10th. And at that point, the average wage was $63,795. Wow. Wouldn't every single one of you say, I would much rather have $63,795 than $10,290? Except a family of four could live with one wage earner back in 1971. And now you need two wage earners. And guess what? They still gave money to anybody earning under $250,000. So what does that tell you? Well, guess what? Hold the fiat currency raises, right? Just pay me in the same exact number of ounces of gold that I would have been paid for in 1971. And at that spot price on the 10th, that means just at spot that I would have been paid $698,250. Now, what would you rather be paid in? Can you see how nominal confusion hides the truth, right? Gold holds its purchasing power. It protects against government and central bank generated inflation. They have taught us away from this because they don't want us to know it. Now, you might be looking at this side and go, all right, well, that doesn't seem so bad. Well, this is a more current from 2008. Because the big question is, and the question that we're trying to answer and deal with in a sound money portfolio, is what happens when the purchasing power goes to zero. And you can't use these to buy anything, just like over 4,800 currencies that are out there, including some from the US. You can't use these to buy anything, right? Well, let's just take a look at this. Okay, there you go. You had almost 5 cents worth of purchasing power on January 1st of 2008. And again, down to 3 cents. So yeah, it kind of looks like it's trailing off, but look at how it's actually faster and stickier inflation. We just got the PPI numbers, and shockingly, not for those that are paying attention, that the PPI personal purchase index has up more than what was anticipated. Oh, shocking, right? This is not shocking. This was all by design from the beginning. They have inflated away essentially all of our purchasing power. So what happens when we go to zero? Well, in 2009, they started testing it and they were attacking your principal because there's no more purchasing power to get. Negative rates attack your principal. Once we are fully digital, what do the central bankers say? There are no limitations on how low we can go. I think it's really interesting because what happens when you lose all confidence in the currency, when the purchasing power goes to zero, then you get hyperinflation. That's when the public loses all confidence in the currency. Gold is the only proven inflation fighter, the only one. Any of the new currencies, the cryptocurrencies, they came out in 2009. They have not been tested yet. Gold's been around for thousands and thousands of years. But let me just make this a little bit more clear. You go to the grocery store, don't you? You go maybe once a week, maybe more. And what are you seeing? You're seeing the prices go up and up and up. There was a day when I first got divorced and I was taking care of my babies and I had $20 to go to the grocery store. $20, that was it. And I had to make that 20 bucks last as long as I could. And I could feed my children on that. Today, if you have 20 bucks to go to the grocery store, you're buying nothing. Absolutely nothing. This is a result of central bank managed inflation. Do you really want them managing the new system as well? Whose benefit do you think they do anything in? Not yours or mine. This is why we have to come together in community and have a voice. If we don't do that, what are we going to get? We're going to get more of the same, and then we are enslaved. We become debt slaves. We have to come together and say no. And how do you do it? Just a quiet revolution. You just convert your fiat money into gold and silver. This is not rocket science. It's really simple, and it's been proven over thousands and thousands of years. Want to know when? Because everybody always asks me when. When is this going to happen? Can you let me know 45 minutes before the collapse? Because there's no time to get ready then. And you guys know I've been preparing for quite some time. So let's go back to the original purchasing power chart from the Federal Reserve. And you can see that zero. And you can see that that's going, how close we really are to zero when you step back and you take a long view. We have been trained to think shorter and shorter and shorter and shorter. So you're just looking at one little piece, but you have to step back and take a look because this is a long-term trend. So you want to know when? This is central bank gold buying, and they're buying into 2024. This goes through 2023. And what I'd like you to notice, this up top is the buying, this below is the selling. If they're liquidating, do you think that could have an impact on suppressing the price, especially when they've admitted to doing so, to impact your psyche, what you think, perception management, how you move forward? They don't want you in this or in this. They want you in this because they can't steal your wealth in this. So look at what they're doing for themselves, for goodness sakes. They started buying again in 2005, 2 years before the crisis was really occurring, 3 years before you knew about it. What are they doing here? Look at that spike in purchasing. What is that really telling you? It is more than they have ever purchased in trackable history going back to 1950. So I don't know. I can't tell you it'll happen Tuesday morning at 8:35 when you will lose all choice, because that's the next thing that's going to happen. There'll be a crisis. There'll be a rush. And, wherever spot gold and spot silver are right now, we know that they're severely undervalued. The markets will move into them. Central banks have clearly been moving into them. So I don't know. Don't believe me. Believe the Federal Reserve and believe what the central banks are doing. Because, frankly, looks pretty darn close to me.
Thank you for joining us today. Lynette Zang has shed light on the critical impact of central bank managed inflation and offered a powerful, time-tested solution. As we navigate these uncertain times, remember that you have the power to protect your wealth and secure your financial future. By converting your fiat money into gold and silver, you can take a stand against becoming a debt slave and preserve your purchasing power. If you found this video helpful, please give it a thumbs up, subscribe to our channel, and hit the bell icon so you never miss an update. Your support helps us bring you more valuable content.